Hello everyone, hope you're doing well. Last few weeks have been challenging for investors across various asset classes, be it equities, bonds, cryptos. So today we thought we'll speak about cryptos with Bitcoin falling back to 30,000 levels. So what next for crypto investors and what next for equity and other asset class investors as well. So let's speak about cryptos to begin with. Cryptos and Elon Musk can't be kept away. So just a highlight as to why we're speaking about cryptos. Let's talk about what Bitcoin has done with using Bitcoin as a representative of the complete crypto market. So Bitcoin a year back was at about $63,000. From there, within like 2 months, it crashed by 55%, came down to about $30,000. In the next 3 to 4 months, it jumped all the way to $69,000. And now 6 months later, we are back to 30,000, in fact, 29,000 as we speak currently. So you could say it means there's been a lot of swings in the crypto market as it's expected normally. So logically speaking, it's a good time to be putting money in compared to where we were 6 months back. Just added a little more information on the same chart as such. How's Bitcoin investor interest been over the same period, last 12 months? May 2021, the crypto prices were at a high level. Everybody wanted to invest in crypto. Every day we were getting multiple calls. People wanted to invest crypto. How do we invest? When do we start? In 2 months' time, the price dropped 55%. People's interest in crypto dropped by more than 80%. Expected because the price drop led to a interest drop. Well, in the next 4 months, Bitcoin prices went up and again, everybody wanted to invest. We still were skeptical. Now prices have dropped 55%. People's interest has dropped almost 100%. Now we're not getting any, you can say, queries about how to invest in crypto. Should we invest today? Should we invest tomorrow? Because everybody's seen a sharp price drop. So what we're going to understand from this is that people's interest comes only when the price goes up, thinking that they will quickly make some good money if you can say the currency, the crypto continues the way it is. Just sharing a WhatsApp forward, every 5% correction in the market, be it equity, be it cryptos, improves our knowledge by 10% and reduces our courage by 10%. So after a 50% drop, we are left with 0% courage and 100% knowledge. Not sure about others, but for Bitcoin investors, this is definitely the case. Figures can vary. So this is just on a lighter side, what's circulating on the social media currently. Well, I spoke about investor interest, but what is the focus of this presentation is that why does this investor interest swing as much as they do? I mean, besides the price. Now, just flashback to April, May of 2021, as crypto prices were going up, crypto companies went into overdrive, advertising returns from crypto, advertising 15% FD returns from crypto investments and various things. Same happened again in October, November of 2021. If you remember, IPL phase 2, all the crypto exchanges were giving in ads over there. Social media influencers were actively pushing cryptos at this time. Newspapers were carrying full page ads. So basically, people wanted you to get into an asset class which had already run up. In more ways than one, it was actually a trap that was being laid. Well, for people who survived and who did not do the investments, great. For people who did, it's a learning. Another important thing, the government also has seen all these ads and they've become smart. They've introduced stringent tax measures. We will go through it in the next couple of slides as well as to how cryptos are taxed. So why I'm speaking about this media hype and cryptos is that media generally will create a frenzy and get people to make mistakes. Some examples in the last couple of years, July, August of 2020, gold was hyped. Gold prices went up to 55,000. A lot of people invested at the wrong time. If you remember, we made our gold video cautioning people about gold investments at that time. In April, May of 2021, as I mentioned, crypto hype was there, which again, crypto hype phase 2 was in October, November 2021, coincided with the jump in prices. In August, September of last year, it was all to do with new age stocks. And some examples like Zomato, Policy Bazaar, many more in the unlisted space, where people were, you can say, falling over each other to try and grab these stocks. November and December of 2021, it was the IT and tech stock boom. A lot of people were very keen on investing in tech stocks. Well, today they're 30-40% down. The same people are not as keen as what they were in November, December to make an investment. Other hot areas in this period of time: IPOs, unlisted stocks, as I already mentioned, then angel investing, portfolio management schemes, and more recently, the LIC IPO. So media's job is to create a hype. They're not in it for your benefit. So that's what I would like to highlight, that be careful of what is being pushed via various forms of media. Now, since I spoke about crypto strategy, this is the strategy that I recommend, though crypto is not for everybody. Please be, you can say, mindful if you really want to be investing in crypto, but if you've decided, then allocate not more than a couple of % of your portfolio. And that too, if you're comfortable with extra scrutiny of your IT returns, because that is very likely to happen going forward with the new tax rules and the TDS rule coming up from July. And if you're investing in crypto, just buy and hold, as they say, hold on for dear life. So buy and hold, don't transact, don't trade, because you're going to end up spending a lot of money in transaction charges, a lot of charges in the taxes that the government is going to levy. GST is coming on cryptos very soon. So all in all, if you're going to invest in crypto, be mindful, buy and hold, think 10 years and beyond. If such a long term, then I would say it has to be primarily in Bitcoin and Ethereum, because most of the other currencies, we don't really know will they survive for long. Interesting tidbit means Warren Buffett says that he will not even pay $25 for all the Bitcoins. So that's the kind of strong opinion he has. Next important thing, when you're investing in crypto, you need to be prepared to share 30% of your profits with the government of India. There is a flat 30% tax plus education cess surcharge as applicable that the government is going to charge. And what the government is also told is that if you end up making a loss, they will not partner with you. They will not bear 30% of the loss. So there's no set off. So the government wants you to be very sure of your crypto bets. Since we've spoken about crypto strategy, good time to also cover equity market strategy. Finally, the Indian markets, means actually global markets, have started a meaningful correction. It's a good time to start adding exposures. We've been very careful by not putting in all your money into the markets. So now we're slowly going to get you to add exposures into the market, because that will benefit in the medium to long run. And importantly, don't worry about negative returns. That's why I've highlighted it in red. Anything that you've invested in the last few months will be in the negative currently. Don't be bothered, because that is actually a building block for higher returns going forward. At the same time, again, means we've been giving you these warnings, but another one, be prepared for a difficult 2 to 3 quarters in the market, be it equities, be it bonds, be it cryptos, be it international equities. We are in for a, you can say, difficult phase for the next few months. We've had a very good run since March 2020. Now is time to normalize as such. And most important strategy, do not keep any short-term money in the markets. If you've got any kind of requirements in 3 months, 6 months, 1 year also, let that money not be anywhere close to the markets. And don't keep withdrawing from the best asset class, which is equities, for any short-term requirements. Please be mindful of, you can say, your cash flows and plan in advance. Some key takeaways: don't trust media blindly. TV, social media, newspapers, each and every one of them have more than 90% paid publications. So learn to ignore the hype and the noise that they create, and you will be benefited in the long run. Stick to your plan, follow asset allocation. Let's be clear on that. If you have any doubts, reach out. Reiterating, do not invest short-term money into long-term assets. And last but not the least, find a mentor, coach, financial planner, could be a friend, who will help you stay grounded when markets are flying like what they were in 2021 and lift you up when markets are expected to crash like 2022. So these are some of the key takeaways for each and every one of you. Hope you find this useful and take advantage. Last, the secret ingredient of successful investors: if something is given 100% in the last 1 year, don't jump into it thinking that the next 1 year will be equally good. So be mindful of that fact. Hope you found this short video useful. Do give us a like, subscribe our channel, and also feel free to share this video with friends and family. And closing with Warren Buffett, now is the time to be greedy because fear is there amongst most investors. So I think now is the time where we have to get aggressive with our investments. Thank you, everyone. Have a good day.